Hello! Welcome to today's analysis of the NQ and a little bit of related markets, which we shall be doing today. It is Tuesday, the 23rd of June. And yeah, I'm going to do some midterm TA today. I'm going to take a look at the yen a small bit, just because I guess my navigation of the indicator, the CTR indicator, has improved. So I might as well update you on what I have been doing with it. I've made some posts that have hinted at, I mean, it's not crazy, the difference in what I'm doing now versus what I made in the video. I can attach the video for you if you're curious. But I'm just a bit clearer. I have a couple of markings that I use now that help navigate the indicator. But first, I think we'll start with TA and then we'll do the indicator. So you can skip if you want to just learn about my new usage of the indicator, but let's just stick to TA for now. Okay, so where are we? How's the 12? 12 is... Let's get to the 12 in a bit. Let's bring this down. Right. Okay, 8 hour. This is the highest I might go to. Is it? I need this. No, I don't need this because it's all blue. I guess I'm going to stick to the 8 because it's the most immediately relevant. What has happened? All right, okay. Actually, rather similar to back here. This kind of little thing. Kind of. But we have a very, very large whale. Not whale like the people who buy the asset, but the largest structure. This is a notable change, and even more notable now, given what we've done here. But this was a large change of character with money flow coming out, which was on lower time frames, but either way, very large change of character, bearish, in my humble opinion, and we hit this 3-day fair value gap mitigation point, which was here, this guy. Twice inside this push down, and then we pushed up and we got a little change of character here. Now this is internal. This guy is internal, and it's smaller than the whale, so it's a squid. So it's the squid. This is inside this structure. Our next whale break would be a break of structure up here, taking this high, which would be a new all-time high. So right now, I guess you know this is we're actually at the 50%, I think. Yeah, right at the 50% of this push down. It's kind of a situation where you'd be mixed, right? You'd be like, okay, it's gonna break down, or where this is gonna take over and this is gonna break up. But that's way too speculative for me. I just got to know the causality of the moves that we're in, and right now we have this. We took liquidity here, didn't get the buy up that we wanted to see inside this zone, and last night, kind of today, we ended up pushing down again and blowing through a lot of demand levels that you'd want to see get a reaction. Now, US could come in today and change that. But right now it's about, it's 10:49 a.m. in the UK session. So I'm going to deal with the information that I have right now. Okay, so bearish case, well, let's start bullish case. Bullish case scenario, this change of character gets interacted with. I mean, it would be nice to see some liquidity into here, right? And then get a buy up from there. We could come down into this block, which would be a touch and go, but it could happen. Not mad about the demand down here. If we do go to the 12, yeah, I'm not crazy about it. I think I have the 2 hour block down here marked for a reason. Let's go down to the 2. Oh, was there a 4 there? Right. There's a 6. This should be 6. Okay, we have a 6 hour block here as well. We didn't have any kind of final damage on this low, which is notable, but I'm not going to let it cloud my judgment. So in the case of this bullish push, this internal bullish push, which you have to be careful with because we have had a swipe of liquidity and we're building internal bearish structure. And you got to remember this guy. So this is, cautious. You got to maybe just, in this kind of situation now, I'd be really playing small internal levels because it will resolve. We all know it's going to resolve. It'll resolve one way or another. It'll become clear eventually. But right now, this is kind of situation that breeds a lot of uncertainty. Especially in this kind of structure now, we're on the 8 hour. So we're going to be dealing with people with kind of more low margin traders. We could see huge flushes of lower margin traders with, not lower margin, higher margin traders, like less leverage, higher margin. They could have stops anywhere that would be huge. We could get big spikes, could see volatility. So I'm just going to stick in this kind of situation. I stick to shorter scalps, kind of a thing. But you could also say, we're not at an extreme, so there's no point really going for swing positions necessarily. I mean, it could happen, but not my cup of tea in this kind of situation. Anyway, we have this guy, so we'd be looking for this to be resolved. So I'm just going to do a quick explanation here. I have an exclamation mark at times here, and some of them don't. For example, exclamation mark on this guy changing to none would be taking liquidity. Now it can just take this, but it would have to clear here. But taking liquidity, and then if we do get a lot of bullish momentum up here, I can start thinking about marking this. But I like to see just straight up break a structure before I change this. It's kind of what has happened here. So we had an internal change, and then once we got this unconfirmed break of structure, or not unconfirmed, but I call it a low liquidity break. So like it's the fresh break. We haven't come back up and retested any liquidity and then moved down again, even more internally. So this would be still untested. But after we get this untested break, then I move this to confirmed. Anyway, so for this pull, we'd like to see liquidity taken and just some proper demand coming in higher and higher. Really nice liquidity sweeps to the downside, eating up all of the orders that are coming in and making fresh pushes up, all of that good stuff. But what do we have on the 2? So we have a bit of a precarious situation. We took external liquidity Then we had this push down, which gave us a nice little change of character. We came into kind of nowhere, like it's tiny little liquidity grab inside here. Filled the gap, pushed up again internally. We grabbed again a very small liquidity point here, which is more notable though because it is on the kind of same level as this greater bearish pull. We had notable internal money flow hidden divs inside this point, and then when price came back up to it and swept the liquidity, money flow diverged again on that point. And I can show you what I mean. It's very very small but noticeable. So we came up on this high here. On this high we had money flow here, and then on this rejection candle we had money flow come up. Cool. On its own, very hard to catch. That's not really going to be crazy good for shorts all of the time. But when we came back up to it, you know, okay, reclaimed the vector, if you want to just stick to kind of simple stuff like that. But money flow was like, from the whole way up here, money flow was diverging. And then when we hit the most extreme point, which was this internal hidden div, so money flow went higher, as price went lower, we were really diverging in that point. So I noted it, I marked it. I like to see that. So we had this change of character, which is, you know, it's one step lower than the whale, but I would be very I would listen to it, because it is connected to the larger potential kind of all-time high that could maybe not get taken. You know, it's a very big pull that we could be playing with. So I'm going to listen to this. So now we're down here, right? And we're just looking for very kind of, you know, a bit of a downtrend, I guess, internally. Being aware that once we come into external liquidity linked to this squid, that we could see a, you know, a very, very sharp pullback, and then maybe people try and short that and then get wrecked. Could happen. So for now, what am I doing? Right now, I'm doing nothing. Let's look at the... I don't have much here, even on my little intraday kind of scalps and stuff. I don't have much here. I have a position open on yen, which I'll get to. And I took trades yesterday in Asia, because Asia has just been absolutely killing it. I mean, look at this. So like, this is open, right, of Tokyo. Let's take 5 hours, okay? 1.2% in 5 hours, right? This is UK open, okay? It's been 3 hours, and we've essentially like not moved, right? We've essentially like not moved. This just keeps happening. It's kind of annoying. Now, obviously, US can come in, and if you have the balls to hold your position from UK Open through US Open, then yeah, sure, maybe you can get 1% move. But Asia has just been giving the good stuff recently, and it wasn't just because of that. My CTR indicator logic was holding up way too strong here, so I had to interact, but I digress. So what am I looking for? Well, we're into the 8-hour order block here. Unlikely to happen, but could happen, is something that I would still wait and see. We have this red vector here. It took the gap. If we get a normal candle close above this midpoint of this vector. That takes liquidity, so it'd have to be in the next 4 hours, really, I think. This guy. Oh my god, my mouse. Up to here. That could happen. Or in the 8 hours after that, we take this guy and then come up. That would be a very strong buy up. Money flow on the lower time frames doesn't necessarily back that up, but it can. It can still be valid. Oh yeah, yeah. Yeah, actually, it could. Yeah, I wouldn't be opposed to seeing that actually. We could get a buy up here for sure. We have a little volume gap in here on this order block. It's a high volume node. Yeah, it's possible. It's definitely possible. But it would probably be US, I would imagine, if it did happen. So that's notable. I'm going to leave the 8 hour one there. So what else we got? Let's go to the 45. So actually, here's the little thing I've been looking at is options, just for an idea of kind of levels and support and resistance. I have this indicator here, which plots out walls. Doesn't update daily. I think this is a, here it is. Gex levels, breakout structure, session VWAP. I don't use any of those. I use the session VWAP, but it's weekly. So it's like 5 days to expiry. These ones. Okay. Updates weekly. So we have puts and calls, right? That can be interesting to see, paired with other things. Still working my way around it, so I'm not going to comment on it at the moment. Okay. Actually, interesting here, we have RTH gap that we've pushed down below before US Open, which is an interesting little bit of behavior. We don't really have many gaps below us. The next gap we have is all the way down here at 28,182. And we don't have gaps above us. Yeah, interesting. Okay. So we could just see some chop for the next while. That kind of it lends itself to more chop. Or we have to let US make more gaps. Oh, never mind. I am eating my words. There's a gap down here. But it has been hit 50%. So we have one to the downside. Anyway. Let's see, 45 minutes. Well, what am I looking for intraday? As I said before, we have this guy, right? This squid midterm, let's say, bearish break. We can come back up, retrace. Would not want to see 30,673 get hit. No matter what direction I'm playing, up or down, scalps or anything like that. This level here, it could come up and just barely tap it, but I wouldn't recommend taking shorts around here if I were you, or if I were me, which I am, so I won't. I had a level down below us. Oh yes, pass range value area high is down a bit lower here. We have some vector recovery. A nice volume gap, a bit lower. Could see a swipe there. Come back up. We still have 4 hours in this 8 hour candle. Or we could dance around here for a while. I would personally, depending on what I see, be taking kind of scalp shorts coming back up into here, into this zone. It is the RTH gap. If you think about it, they gapped up, missed orders inside the gap. UK has pulled us below the gap. Price moves up to hit offers. If there are enough offers inside of this zone, we could get some selling, and we could get some nice scalps. So we'll see. But right now I'm a bit standoffish. Probably have breakers in here that we could use and everything. Tokyo's all the way up here. I am a bit iffy about this zone in general because of the context. I did say that we could get demand coming through here, and demand that is linked to this change of character coming for Tokyo's high. Obviously they could pull something cheeky and just bring it up and then bring it straight back down during US, but I'm going to wait for that to happen. I'm not going to. I'm just kind of sitting back at the moment. So yeah, we're in between. Honestly, guys, we're in between, and that's okay. Just let them paint the picture, you know. Where are we with other markets? So the dollar's pushing up and is pretty strong, honestly. Dollar is pretty strong, which is something to note. It does make sense that the market has moved down. Oil is just continuing its kind of grind lower. We look at the yields. I believe the 5-year. Oh, okay. They haven't actually done much. They've moved down a small bit, but the dollar is leading the way for sure. The VIX. Okay, VIX is spiking. It's interesting. We could see a bit of a buy up, depending. Yeah. Yen. All right, I'm going to start talking about the yen now. Yesterday I did some shorts, as I said earlier, and so the yen is at interesting levels. So, oh yeah, sorry. Vectors on the yen haven't been behaving the same way that they do on the NQ. I use vectors a lot. A lot of my let's say validation of structure and validation of moves and momentum and all of that, obviously momentum, is using vectors. And as you saw earlier with my fib tool, this 50% red, white fib tool, I normally use that in order to kind of confirm levels being hit and used in a way that it might not come back there. I use that for my entries a lot. Right now on the daily, we are at like the low on yen. We are at the low, right? We have not taken it yet, but we are at the low. Actually, the daily is weird. It doesn't match up for some reason, but I'm gonna go 12 hour. This is what we're playing with here. But it's still notable that we haven't taken this low over this amount of time. And if we look at the futures, which I'm not going to because I'm in a position, but if we look at the futures, it has just been breaking lower and lower. But I use this chart. I don't use the futures chart. I use this chart for my CTR. We had this push up, which gave us a very, very nice push down on the CTR, crossing both of these lines, as I've outlined in my video. And then we seemed to be basing out around here. We had hidden money flow divs, so money flow coming down lower than this point. The whole vector thing it's a bit iffy. I have it marked. We could come into this point again, sure, and get a normal candle close above it and all that good stuff. But I'm gonna just mainly look at like kind of money flow in this situation. You know, we've had the push up. we've had the CTR doing its thing. Price action seems like it is bullish. Even just basic market structure seems bullish internally, and we have a ceiling up here. So this is the part that I have added. Before in the video I talked about these markings here. So I take the apex of the divergence to where it stops diverging, so where price and the CTR starts moving together again. And I mark the source of that up to just kind of the top of the push. And I use that source, okay, as my floor. So this is the floor. They generally can use this. If this precedent, this idea of CTR down, which means stock market down, or risk assets down, risk off, if that's still in play, if that's holding, they can dance around it and push. Now, that's why I mark this. Same for the ceiling. I have a ceiling up here. I have this ceiling here as well. Then it's the opposite of this. Okay, it's like CTR up. So let's move this here, and it was down. Oh wait, no, never mind. It was supposed to be here. Yes, this guy up here, right? Because we had. Where's the lowest point? Okay, I guess this is the structural point. So I normally take it from structural points. So here until here. No, it kept going. Here. This was the highest point. Sure, we had CTR up. This isn't as strong. I think it is stronger looking on the 24, but if I'm a bit iffy on it, I'll give it a little question mark. So it's like, up, this up. So I generally play these points because they can act as support and resistance. But I took my shorts on the NQ, seeing that price was respecting this floor. That's it. I've added these lines. That's it. Just to help myself navigate it. The CTR indicator, it's one that you need to use it. You need to pick when you use it. You need to choose that, okay, this price action is good enough. This divergence is strong enough for me to start looking at the NQ or other markets and going, is the NQ lining up with this? Because I saw it holding out around here. And, you know, all of these buy-ups, even though, yeah, we had the liquidity push, but all of these buy-ups, the NQ was it was very sensitive. Like, every time we had a 24-minute close on these pushes here, after hitting the floor, and getting, you know, money flow absorption, the NQ was, at the same time, really like going, like, we're going down. Like, you know, it was just kind of like proper straight continuation model down. Can I show you an example? Like, well, I can show you the trades from yesterday. So they were up here. I'm not going to go into too much detail, but it was mainly it was this guy. Now this was pre-market, so I moved my stop to an area that I was comfortable with, because this is a pre-market trade. It was more of a vibe trade. I saw it was kind of it was a bit more of a vibe trade. I saw money flow and I was like, well, if money flow hits that point, I definitely know that we're bullish. So, and I was like, I don't think we're bullish. So I took a very, very low position, and then rode that as we were pushing lower and lower and looking at the local pulls and where price would want to be. It based out here, and then once I saw any semblance of something that I can see as an invalidation point, I put my stop there, and I was like, that's fine. Look, it's Asia, it's Tokyo. I'm going to let it do what it wants to do. Then I saw that we could hit offers. As price was moving down here, the CTR was pushing up, and we broke structure and everything. But then I saw that, okay, we are trapped in these ranges. We're trapped. This is our high. Okay, if we zoom out, this makes more sense as well. But this is our mitigation point. We mitigated a 45-minute here, right? This is our high, our internal structure high. We've broken low. We even broke greater structure lower. Time for a retracement. Where can we come into? Obviously the vector recovery. We're still within this. So once I saw this, I knew we could hit offers, right? CTR, we had the move on yen, which sets the precedent for the stock market moving down. We were balancing on the floor. We were using the floor. We're getting absorption around the floor. That stays in my mind. I know that we're probably staying bearish, but I can still take a long, because CTR was moving so slowly. The yen was moving so slowly. It wasn't breaking down. And the NASDAQ had just created this very large liquidity area. Money flow coming down. So I said to myself, if the yen's not going to move, then the NASDAQ has time to hit offers, right? And that's what it did. And I actually used the order flow chart on deep charts. So this chart over here, I used this order flow chart to take a long, to hit offers. I'm not going to get into how I did that. I just used the order flow. I saw that bids that got hit. Let's say, for example, like this point over here, we started to take liquidity moving into it, hitting bids, not leaving bids behind like we did here, and then starting to hit offers aggressively, getting a buy up. And I knew structurally that once we reached a certain point that we were probably going to strike the offers that were built around Asia. Tokyo Open. So anyway, once I got any semblance of that failing, China opened, and then I had my continuation model. The yen was still doing its stuff, so I opened a short. Again. Which I could have obviously kept. Like, look at this, holy crap! But it's okay. Just for the fun of it, what would have this been if I took it out now? At 28. But that doesn't matter. I was going to bed, and I don't normally trade this, so. But anyway, that's the logic. Look at this. You see? UK just does nothing. Just does nothing. Anyway. So that's the CTR indicator. As I said, you have to choose when to use it. I mainly look for large divergences like this at important levels and crossing these two lines. That's it, really. I use money flow as well, obviously, and basic structure. It won't always show up, and sometimes you'll miss them, and that's fine. But when you do see something notable, just make sure you mark it and you're using it. And my invalidation for this is kind of this low, but like I wouldn't want to see it come down too low here. And it wouldn't maybe necessarily be my invalidation because this could be part of the pull, but my trade ideas at that stage, it'll be so extreme that I could probably be in a better trade at that stage, Yeah. Okay. It was a long video, but that's everything for now. If you have any questions, please let me know. As I said, we're kind of sitting back and waiting. Could take some scalps. But for now, yeah, I'm not in any trade besides the yen. All right, peace, guys. Happy trading, and yeah, I'll see you again soon. I'm going on holidays, so I won't be around for a bit. But yeah, I'll chat to you when I'm back. All right, peace. See you around.